For that. The street is excited about the potential of movies like Drishyam as well as Avatar. Hemang Jani of Motilal Oswal Fin Services now joins it. Hemang, it looks like Drishyam 2 is a massive success, at least going by the weekend collections. Do you think this could reinvigorate, multiplex stocks, which have been under pressure ever since they came out with their Q2 numbers?
Good afternoon, Rima. I think for the multiplex stocks, Drishyam 2 and its response and collection has definitely been a big positive trigger, along with Kantara, which has got a very strong collection both in India and global, kind of right to go with this entire flow and chase the momentum. So at best, it could be a small tactical trading opportunity for traders.
Tactical trading opportunity. By the way, Rima, have you seen Drishyam yet?
The first one, yes. Not the second one, no.
In Malayalam or in Hindi?
I've seen the one in Malayalam. I'm waiting to see the Hindi one as well. But the Malayalam one was very good. But I heard it's a little different now, the Hindi one. There are some twists.
Not sure. I've seen the original. There's such a heated debate, right? I mean, movie buffs who've seen both, which is better. But yeah, I mean, the original absolute classic. 160 points lower. What 18,146 is where we are at. Hemang, hi. From just feedback from people you speak to, market intermediaries, dealers, sort of retail investors. Is there a little bit of nervousness creeping in, some cautiousness creeping in? What are you telling your clients to do?
Yes, Prashant. In fact, when we see the large cap versus mid cap performance in the last 3 months, 6 months, it's clearly telling you that the retail is not so gung-ho in the market, and at portfolio level, the performances have not been that great. I think the larger focus is on the option side, where by and large, because of the lower IVs and lower premiums, people are kind of making money on various strategies that they are following. But there's a sense that when the index is at a high level, and if the portfolio is not performing, it's not a good sign. So people are slightly more cautious at this point.
Okay, all right. Hemang, what about these Ferris names? All of them ran up in anticipation that there's going to be some relief. The relief has come about. The problem is on pricing as well as demand. It's a little bit, sluggish domestically and internationally as well. What do you do with the Ferris names in particular?
So, Nigel, we do like this space for the reason that after a long time, we have a status quo being maintained, and names like NMDC and JSPL, and even the second manufacturers like Shyam Metallics or the pellet exporters like Godavari Power, they will stand to benefit. But what we must reckon is that for steel companies, there is going to be a corresponding increase in the input cost. So at margin level, there may not be any significant improvement, and that is what is reflected in the price also. As you can see that Tata Steel Sale, etc., have actually come off from the high level at which they had opened. So I think NMDC and JSPL are the names where we are positive on.
All right, Hemang, stay with us. We want to put the spotlight on IEX as well, as its board is set to meet later this week to consider a share buyback. Vivek is here to tell us more. Stocks up about 4-5%. Vivek, take it away.
Well, that's right. So IEX, after a very long period of underperformance today, is buzzing quite strongly in the session. The news is that the board will be considering a buyback of shares, and this is on November 25th. The total cash that the company has on the books is close to 1,000 crore, with the estimated free cash to be in the range of close to 500 crore. Now, if you're talking about IEX itself and how the stock has performed, it's been quite a bit of an underperformer lately. In the last year, it's down almost 44%, and the stock is just marginally off, the 52-week low of close to 134. Now, what's actually happened as far as IEX is concerned, the reason for the underperformance has actually been the fact that the company's, almost near monopoly status has now been threatened. There are 2 new power exchanges, so that has clearly had an impact as far as the significant premium valuation multiples that the company was enjoying earlier, and also the management commentary in terms of expecting near-term trading volume softness on the back of the fact that there is now a price cap as far as power prices are concerned on the short-term exchange is also something that has impacted IEX's interest as far as market participants are concerned. However, going forward, the management has indicated there are a couple of key triggers. The first one, of course, is the introduction of long-duration contracts in IEX itself. So that's a big market. And also, the operational efficiencies of the Indian gas exchange, that in which company has a significant stake, is also seen to be a key trigger going forward for IEX.
Okay, all right, Vivek, thanks a lot for that. Hemang, what do you make of this one? IEX, I recall the stock at more than 300 rupees. It's half from there. But also, if you look at it, from the earlier, 3 years or so ago, the stock went up one way. Now it's falling one way. At around 140 rupees, or the management is saying we're going to put in some money, we'll buy back some stock. There are some triggers as well going ahead. What would you do with it?
So Nigel, we used to like this story, and we had participated in the initial up move that was there when the entire platform companies and the re-rating that happened. But I think the stock moved ahead of the times, and we have also seen a very significant correction. And we just should wait for the extent of the buyback and the price at which they will be doing it. But we do like this space. So at some point, basis the actual performance over the next couple of quarters, we may want to reinitiate the coverage there. But at this point, we are avoiding this name.
Hemang, what about Zomato? Sorry, what about Zomato? Two sets of news over here. One, that co-founder Mohit Gupta has stepped down, making it the third high-profile exit in the last 1 month. And two, reports indicate that the company is looking to axe about 3% of its workforce. Do you think, how much of a negative is this for the stock? Because, one could also look at it in the fact that, cutting down and cost optimization will help the company on its path to profitability, which is something that the investors are gunning from Zomato. So how should we read this development from a medium-term point of view?
So Rima, I think the high-profile exit in any startup and platform company is not a new phenomenon. I don't think the market is going to get perturbed by that. And when we compare Zomato with some of the other new age IT companies, be it Paytm or Policy Bazaar, Zomato relatively in terms of performance and the potential is better placed. Also, a large part of the selling which was there has also got absorbed, and post that the stock has seen a decent amount of uptick. So we think that it is relatively better placed, though we would not be very comfortable taking a longer term view. But given the quarterly performances on many operating parameters, we think that this provides a good opportunity for retail traders who are looking for a 10-15% kind of a move. So this is definitely a preferred one.
Okay, all right. Stay with us, Hemang. For the time being, though, we'll have to slip into a short break. On the other side, we'll be joined by Alpha Manager of the Day, Hemang Jani of Abacus Asset Management, will be joining in to discuss